All right. Good morning, everybody. Hope you guys are all having an absolutely amazing day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are all having an absolutely amazing day. Welcome to today's edition of the DMC. We are going to do what we do each and every day, identifying from an educational perspective both breakouts and reversal trades, looking for the best opportunities in our. Click the subscribe button, hit the notification bell. Want to get as many alerts and updates as we can out there for you. So make sure that you that when you do get those, that when we go live each and every day. So if you're watching on LinkedIn or Facebook, also make sure that you leave a comment down below. Also means a lot for the computers and the algorithms to know that people are actually watching and paying attention. So let's go ahead and get rolling today. We did see in both the S&P and the NASDAQ that we did get a little move after the gap and go, but all of a sudden we completely hit and reversed and went back the other way. Now, what caused that? Well, what really caused that price, kind of hitting and coming back the other way was the simple fact that we ran into all of the fundamental news around lockdowns. That's one of the things that I heard a lot of people say as well. If you've got all those lockdowns that are occurring, then that's going to be part of the issue and part of the problem, that people are going to have a really hard time, absorbing that. I don't know that that's the case. I was pretty sure that it was going to be a bit of a pullback anyway after we'd had the vaccine announcement. And the vaccine announcement, when it did come through, was certainly something that we were that we were not surprised that there was some profit taking after the gap up and that little bit of a rally. So not overly shocked that we saw this moving. And so when I look at where I see the next opportunities, the area that I would go on to on these markets, the breakout level here, not all that clean. We did come back down into our 15-minute area of demand right in this zone. And we're unable to really do a whole lot from that move. We came down and we kind of rallied a little bit off of that zone. Now, what are we looking at? Well, now what I'm looking at is the fact that we have on our 4-hour chart a little bit of kind of sideways price action without really any strong gains. And so I'm going to need something a bit better to tell me that we're going to see, price to move one way or the other. So I think today's actually a really good day to sit on our hands and not do a whole heck of a lot overall in these markets. So that's the first one that I would say is important to take a look at. The next one after the ES would be the NASDAQ. So looking here at the NQ. So the NQ yesterday, we had a little bit of rally, very strong move away. We did come back and retouch our 15-minute level later in the day. Came a little bit below there, got a rally away, came back and touched it again in the overnight and got a strong rally away. So both of those levels, decent move away. Not sure if you're going to stay in that one below the level or not. So we've got to look a bit higher. And I would say that this area right here is the one that makes the most sense on our NASDAQ position. So price coming back down into this region, 12,473 by 12,465 would be the area that we would identify. And then the other market that we take a look at here in the YM and the Russell we thought was a better rally up opportunity after the 6 candles, right? 1, 2, 3, 4, 5, 6 candles later. We talked about moving our stop to break even. Wound up being the right move as price really kind of went nowhere in that in that period of time. So now when I look at this on a 4-hour chart, I've got a little bit of a potential breakout area here above 1943. That's kind of the next level that I would look at for our highest degree of probability on some sort of a breakout. So those are the areas I think I'm paying attention to in our equity markets, the ones that give me kind of the best picture and the best opportunity would still be to the bullish side. I've not changed my bullish outlook, but I will say a little bit, not overly surprised that we saw that profit taking in those markets. So really, when I come back and look at it, the only market that's giving me probably the least amount of probability would be the NASDAQ, right? Or excuse me, the S&P. The NASDAQ's a little bit better on a pullback. The Russell's a little bit better on a breakout. When I look at the Dow, we had kind of the similar picture, and it's kind of chopping sideways in between. So when I think about those four markets, those are the four that are going to give me the best opportunities most of the time. But today, I would say that the NASDAQ and the Russell are slightly better opportunities than what the S&P and the Dow are giving you. So I'm going to go ahead and share that grid so that everybody can get a copy of that, and then we'll take a look next at the commodities market as our next one. Okay, so looking at our commodities markets, going to our crude oil and gold and our other markets. So starting first with crude oil. So crude oil yesterday, we had identified this little wick over wick area as our strongest reversal point, and that trade is absolutely killing it. We got a very nice strong move away. So if you took that long in crude oil, then take your stop, move it up right underneath this 46.54 area. I think that would be the best opportunity to lock in some of those profits. And you know, from 45.88 to 46.54, that's a pretty good move out of that zone. Now we traded all the way to the bottom. So since we traded all the way to the bottom, I need to remove that level, and I cannot use it again. But I still have the breakout above 47.74 as a potential for entry. So if price comes back above here, look for basing in this region and an opportunity to get long somewhere above that level. Gold, now gold yesterday, unfortunately, just the opposite of what we expected in the S&P. Gold actually popped right through our little area of supply for a small stop out, little small area that I think was well worth the risk, especially if we do indeed wind up getting the breakdown below 1824. I still think the breakdown is valid below 1824, although on my 4-hour chart we've gone very sideways, and so I don't have a lot to add. We could look to this area up here for our next level of supply. Now, how do I know that a downtrend is over? It's one of my supply levels keep getting stopped out. Well, as I look above me for these levels of supply, it's cleaner on the 4-hour than it is on the 1-hour. And I don't take entries on the 4-hour levels. I take entries on the 1-hour levels. The 4-hour levels just give me the trend, right? So knowing that, when I come back to the 1-hour, that these levels aren't very clean, that's going to give me another reason to not jump in on that short in these areas up here. So how can I make a play? Well, you could theoretically also look for basing above here for a small move. If we get basing right in front of this area, look for a breakout outside of this range. Natural gas, we had talked yesterday about our nat gas and the fact that we had moved our stop to the break-even point because we had gotten our 6-candle rule. And so this was an example of the 6-candle rule pulling us out of a trade. And now we're seeing that our uptrend that we had started, there's a little sign of weakness there, I would say, right? A fair amount of sign of a sign of weakness. So let's look and see if price comes down from there. I will say that this wick over wick down here is a very intriguing level, provided we don't get basing into that zone. I think that's one worth identifying and worth taking a look at as we head into the next couple of days. All right. So those are the levels that I'm looking at in these commodity markets. Not a tremendous. And when there's not a whole lot out there, I'm asking you, what should we look for? Well, we should look for patience, right? We should look for patience when there's not a whole lot out there for us to utilize, because that's going to be when we're going to find our better levels, is when we're just patient and waiting for the right setups. And I don't see a whole lot out there today. We're going to see next that we move over to the ags, and the very similar picture exists in the ag markets, that there's not a whole lot worth leaning on in here for me to say, hey, let's trade that one. You know, when I look at soybeans, we're still in between our supply and demand levels, and so nothing to add on soy. If I look at corn, very similar picture in between. If I look at wheat, we had talked yesterday about wheat as a potential, and we had this little area here where we broke down from that little area, came down to a secondary level, which we thought was a pretty decent objective. And now we're just chopping around in front of that area of wheat. And so I think that there's actually a pretty decent reversal here in this wick over wick area. But that's to the left. Okay. Let me share this one here real quick. And I know I'm going a little bit fast today, but that's primarily because I don't have a whole lot to lean on. When there's not a whole lot of market opportunities out there, we're not going to spend a tremendous amount of time forcing those trades. So now let's move over to bonds and currencies. And sliding over to bonds and currencies, we had talked yesterday about the ZN level just above us. That ZN level, we had seen that little bit of a sideways, nice move away, a lot of buying pressure in these lower candles. So price popped through that area and then went essentially nowhere. And so unfortunately, nothing really to add from here. It was a small little level that, once again, we talked about yesterday. When you've got an area of supply above you in the 10-year and an area of demand below you in the 30-year, you know, it's going to make it for a little bit more difficult, tougher sledding. And that's kind of where we were set up in that position. When I look at my currencies, I see a very similar picture. I felt like we had a decent move here in the euro. Unfortunately, the euro gave us a 1, 2, 3, and on the fourth candle, kapow, we broke right through the low. And so yesterday was a tough day with a lot of sideways price action and a shifting of direction. You know, we now are in a bit of a range bound situation in the euro. And so we're going to have to get through this range bound for anything to make any sense. Same thing with the Canadian dollar, a bit of a range bound area. Once again, when those currencies fall, they're all going to fall in the same way. And so those demand levels all get hit much in the same way. I would look for a breakout above 78.68 here is still really the best setup and the best trade if we get the right amount of basing. And then the last two markets, the New Zealand dollar first. Looking at the New Zealand dollar, once again, 1, 2, 3, 4, 5. This one's 6 candles in, basically had went nowhere, so telling us, hey, you should probably get out. And then the demand level down below, which was a bit of a wick over wick unbalanced area, I felt like was pretty good. Well, once again, if the dollar is going to give us a pop and we're going to see all of our currencies fall, it's going to cut right through those areas of demand. And now that makes this 15-minute area down here that much weaker. So I'm going to remove that 15-minute area down below. When I go to the 15-minute areas above, none of these are quality areas of supply, right? So back to what I said earlier, there's just not a lot of great trading out there today. Great British pound, very similar picture. Once again, that strong move down in the dollar cut us through that lower area of demand. In the pound, it did it in the yen. You see the yen move down as well, and then we see it again in the Aussie. We saw that other move down. So all of our currency levels, and this is when we're trading everything against the dollar, they all moved the same way yesterday, and they all moved against us. And so you're going to, you know, Mama told me there'd be days like this. And so what I'm going to do today is I'm going to take a pause. And this is, I think, what for me, the best remedy when I have a day where the market just completely goes against me in the currencies, the best remedy is to take the day off and to not force a trade when one isn't there. And I think that's what makes the most sense for most traders that are out there, is to not force it. So I've got nothing to add to any of these currency levels today, and I hope that doesn't disappoint you. But I'd rather be safe than sorry in these market conditions. The best trade of the day yesterday was by far crude oil, which definitely was our runner, allowing us to make up for really any of the losses, hopefully, for most of you that were out there. But now we're waiting on the S&P and the NASDAQ to really give me some sort of a trade identification or direction, and the Russell breakout, I think, would be the best one. So I know a little bit fast today because I don't have a whole lot to review overall, and I wanted to make sure that we spent the time to go over at least some of those key levels. Tonight is our tactical reinforcements class, so those of you that are joining us for the tactical reinforcements class, I will see you tonight. If you have any questions, as always, please feel free to send me an email, chuck.fulkerson@tradersarmy.com. Thanks, everybody. I appreciate you joining me, and I will be back.